Good morning, everybody, and welcome to Morning Markets. My name is Chris Leyland, and I'm Director of Investment Strategy here at True Potential. And what I want to do with today's Morning Market video is really let you into the discussions that we're having as an investment team. So today's video is going to focus on a preview of the week. So what news, what data points are coming out overall. So let's start with Thursday. And there we have the ECB, so the European Central Bank rate meeting. With all the discussion about possible rate rises before the end of the year from other central banks, one central bank looks set to remain on the sidelines for some time to come. So in September, the ECB announced it was slowing the pace of its monthly PEPP bond buying program over the next 3 months. So that's currently 80 billion euros a month. There will be a wider discussion on its future in December, but it was made clear that the number could be moved in either direction if required. There's certainly been an increase in anxiety levels amongst some parts of the Governing Council due to the recent rises in CPI levels, so recent rise in inflation. In Germany, they're back at levels last seen in the 1990s, so above 4%, which is prompting a lot of discussion around an overheating housing market. It's certainly true that the headline CPI is at a 10-year high of 3.4%. However, core prices are much lower and still below the ECB's inflation target of 2.9%, so they're at 1.9% now. Despite this, a number of ECB policymakers have expressed concern that the Governing Council is underestimating the inflation risk, according to the last set of minutes. On the same day, we also have the first iteration of the third quarter US GDP, so economic growth. And really the question is, how much of a slowdown have we seen since the confirmation of the 6.7% growth in the second quarter? So consensus is for a slowdown to 2.3% in the third quarter. And that's with a combination of rising Delta variant cases, weaker demand, and supply chain disruptions acting as a brake on the economic rebound. A collapse in consumer confidence, higher prices, and a slowdown in hiring in the US job market appears to have contrived to prompt a bit of a pause for US consumers, but that's after a fairly strong start to 2021. I think one notable takeaway from the first 2 quarters of this year has been the resilience in personal consumption. So that rose 11.4% in Q1 and 12% in the second quarter. If we do get a substantially weaker reading in this week's Q3 numbers, it's here that it's likely to manifest itself, although the number could well be skewed by the tough comparatives of a year ago, which saw personal consumption rise by 41%. And just finally, and again, sticking with central banks, also on Thursday, we have the Bank of Japan rate meeting. So another central bank unlikely to be in a hurry to tighten monetary policy. They've been trying for nearly 40 years to try and engender some sort of price inflation and growth. At the last meeting, the central bank painted a more difficult outlook for exports and outputs due to the various supply chain disruptions and factory shutdowns which have blighted the economy in the past few weeks. While inflation is rising in the rest of the world, the latest Japanese CPI numbers have remained stubbornly in negative territory for all but 1 month this year, so sliding minus 0.4% in August. With a new Prime Minister and an election pending in November, the bank will carry on as normal, as well as likely cutting its inflation forecasts and GDP forecasts, although the slow of easing restrictions at the end of September should offer some respite. As well as that, we also have the UK budget. We've got company results from Facebook, Amazon, Microsoft, Apple, and Alphabet, as well as the UK banks of HSBC, Lloyds, and NatWest. Okay, that's everything from me. I hope you enjoyed today's preview. I look forward to speaking to you at the end of the week. Thank you very much.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.